happen at any time. Student preparing for the performance management paper all the time, I tell students that please, even if you get to hear of it, keep it in your head. Do not be moving around, be telling people of this bit. If you tend to do that, then you are not helping us, please. Because aside doing the teaching, please, we want cash from students. So it's better the student joins us for us to get some cash. Because it's not easy. It's not that probably, it's just easy to absolutely go through this bit. So at least if we're getting some small compensation from the student, it's okay. Students preparing for the performance management paper come June 2021 should prepare themselves massively in the case of what we call break-even analysis. Break-even analysis. Break-even analysis / throughput accounting. You can decide to listen, you can decide not to listen. But on the day of the, as you tend to sit behind the paper, you actually say that, oh, you didn't help yourself for not listening to that gentleman who talks too much, right? So we have break-even analysis, and that is also called cost volume profit analysis. Then we have throughput accounting, but we are not looking at throughput accounting in part C, right? Come June 2021, we are not looking at throughput accounting in part C, but we are looking at throughput accounting in part what? B. Part B, throughput accounting. Let me highlight that in what? Blue. Students tend to say that, oh, Henry, I just want to hear of your exam tips. Your exam tips that I need, that's why I decided to come to your class. A student actually told me that in my online advanced audit and assurance, I'm just joining your class because of your exam tips, right? I just like that. I just like it, right? That's it. So part C, I just made here part C. Sorry for the mistake, right? So part B, break-even can feature. Part B, throughput can feature. Students going to write the June 2021 ACCA PM paper should prepare themselves adequately for this. Do not say you were not told. That is it. Do not say you were not told. Oh, Harry didn't tell me. Oh, that guy, and go to his class, he doesn't teach anything. Right? So break-even is also called cost volume profit analysis. And what do I want you to know from that perspective? What I want you to know is what we call break-even for a multi-product. That is the main reason why I decided to bring you here. Break-even for a multi-product. That is it. Break-even for a multi-product. That is this element. So break-even point in multi-product. Please, you are to ensure that you're in good shape. I have come out with a recorded lecture where I solved a question on a break-even for multi-product. Please, you are to go back to that recorded lecture. This is just a reminder, right? This is just a reminder. I have not walked you through break-even. Those of you, my current students, have not walked you through break-even. But I would want you to what? Go straight into this issue because it's an exam tips. I do not want you to waste time, right? So we have break-even points in sales. If it is a multi-product, we need total fixed cost over the weighted average of the contribution per unit. And in my recorded lecture, I show students how to calculate weighted average of the contribution per unit. Then also be mindful of the calculation of break-even points in sales revenue. That is total fixed cost over weighted average contribution to sales ratio. So we have a lot of examples over here, though this manual is also for ACCA, but we have a lot of examples over here, which the student can go through in the case of break-even for a multi-product. This question, for example, let's read it and digest it quickly so that at least I put these matters behind. Example, PL produces and sells 2 products, M and N. So you can see that it's not a single product. We have 2 products, so it's a multi-product. Let's move on. Product M sells for $7 per unit. So we have the selling price per unit to be $7. Let's move on. And has a total variable cost of $2.94 per unit. Oh, we can calculate contribution. You have the sales per unit, variable cost per unit. Can't you calculate contribution? We can, right? Whilst product N, so they are finished giving us the sales value and the variable cost for product M. They are moving on to product N. While product N sells for $15 per unit and has variable cost of $4.4 per unit. Let's move on. The marketing department has estimated that for every 5 units, why are they giving you? They are giving you the mix to use in the calculation of what? The weighted average of the contribution, or the weighted average of the contribution to sales ratio. Look at how the examiner has presented that item. You can go back to my recorded lecture. I have talked about this, right? In the calculation. And this is a question to prove that, right? The marketing department has estimated that for every 5 units of M, 1 unit of N will be sold. What is that information? That information has been given you to calculate the weighted average of the contribution. See how beautiful the examiner has made it. Very simple to do, right? The organization's fixed costs, as we have all the time indicated, we do not use fixed costs in performance management in taking decisions. All the time, decision making is based on contribution. If it is throughput accounting, decision making in throughput accounting is based on throughput. If it is not throughput accounting and it's any other decision making technique, we actually use what? Contribution. No wonder even in the case of shutdown, we use what they call the variable cost and the sales price. That is in terms of how much we even buy in. So just be clear. In PM, most decisions are based on contribution. Now, we are saying that the organization fixed cost per unit total 123,600. So you can see this is the total fixed what? Cost required. So the requirement says that calculate the break-even point for PL. What is PL? PL is the company. And it produces M and what? N, which is a multi-product break-even. Now, this is well dealt with here. What did we do? We said solution. We calculate the break-even point as follows. Step one, calculate the contribution per unit and the weighted average contribution per unit. So if we are able to determine the contribution, we can find the weighted average of the contribution, right? And look at how we calculated that. In the case of product M, the sales value was 7. In the case of product M, the variable cost was 2.94. When you take the variable cost from the sales value, you get the contribution. You can do that wherever you are. 7 minus 2.94 will give you 4.06. So we indicated that in calculating contribution is equal to sales minus variable cost. Yes, that is it. Or we can also say, if students will remember their bits, we can say contribution. A lot of students do not like this. This formula in calculate contribution. Profits plus fixed cost will also give us contribution. This one, a lot of students do not like it. All the time, they will know the first one, and they think that they are doing well for PM. Contribution is equal to sales minus variable cost. This is a way of calculating contribution. We can also calculate contribution by adding profit to fixed cost. These are the two ways of calculating contribution. But over here, we cannot use the profit plus the fixed cost approach. We can only use the sales minus variable cost approach. Some questions, you can use both techniques in getting it. But over here, the only technique you can employ is sales minus variable cost. So you can see the sales value is 7. The variable cost is 2.94. When you take the variable cost from the sales value 7, you get 4.06 for product M. Then we do same for product N. The sales value is 15. The variable cost is 4.4. When you take 4.4 from 15, you get what? 10.6. Please, this has already been read. This has already been read, so I don't see this to be a problem. Now, after calculating the contribution, we decided to move on to calculate the weighted average of the contribution per unit. So now what you have to do in calculating the weighted average is that, let me just bring it over here. If you remember your WACC calculation, we call WACC weighted average cost of capital. If you remember that fraction we use in doing that. So we say some students just come out with the element of just say, oh, KE times E over E plus P plus D plus KD 1 minus T times D over E. That's sort of the same bit we are using over here. So do not think that was just learned for fun. Financial management you learned was for fun. No, it wasn't for fun. It's the same bit. Weighted average you did in cost of capital is the same weighted average here. But they are telling us that M is equal to what? 1. Sorry, they said M was 5. Sorry, let me go there. They said M was 5, right? In this question, they said M is 5. So if M is 5 and N equals 1, then at least the total is equal to what? 6. So the weighted average for M is going to be 5 over 6. And the weighted average for N is going to be 1 over 6. Case close. That's how you find weighted average. You find the total, it's just like normal proportion. M is 5, N is what? N is what? 1. Because they said for every unit of M sold. So when we sell 5 of M, 1 of what? N is sold. 5 of M, 1 of N. That is it. So I don't see this to be a problem. But the examiner decided to find a way to compute that. It's still the same way, please. I'll show you. You see that it's the same weighted average bit you learned in the University of Financial Management, weighted average cost of capital. The same thing you are learning here. So contribution from sale of 5 units of M is 5 times 4.04. Is it not the same as what we would have done over here, right? So let me show you how to calculate it. And students go through the recorded lecture, they can't see anything. Weighted average of contribution. How do you calculate that? Now the contribution for M, we are starting with M, right? The contribution for M is 4.06 times 5 over 6. Is that not what you do? Then you come here. That is it. Then you come here. That of N, we go to that of N. N is going to be N. We got the contribution for N to be 10.6. That's the contribution. And it's going to be 1 over 6. The student will say that this one there is the same work I did. If it is that work, you remember that work, this 4.06 would have been, let's say, KE, and times the equity over the total equity plus debt. If you remember those bits, I think you guys are in good shape with that. So this is the same way, but the examiner decided to calculate it in a simple way, right? Another way. What did he do? He decided to use the 5 to multiply the 4.06. Is it not the same as 5 times this? But at the end of the day, he's going to divide by the total. That's what you do. So he used the 5 to multiply the contribution. The mix times the contribution. So M mix is 5 times the contribution is 4.06. N mix is 1 times its contribution, which is 10.60. And that will give us 10.60 as you go over here. So what did they do? Look at the smart way the examiner is doing it. Students tend to forget that the same thing they are doing in school. So when they multiply the mix by contribution per unit, in the case of product M, they got 20.30. In the case of N, they got 10.6. So when you add the 20.30 to the 10.6, the examiner got what? 30.90. And what did he do? He came to divide it by 6. You can decide to rubbish this technique per solution and use the technique that I gave you above and see if you don't get the same answer. Wherever you are, type with your point with your calculator. 4.06 times 5 over 6 plus 10.06 times 1 over 6. Do that and see if you not get the same answer by using the other approach. Do that and see if you don't get the same answer. So when you talk about weighted average cost of capital, here we are talking about weighted average of contribution. Is the individual contribution of M and N, then you find the weighted of the averages of the contribution. And that is what you can see. They gave us the mix, right? The mix is what gave us the fractions. 5 over 6, 1 over 6. Then you multiply by the individual contribution. Then at the end of the day, you find the weighted average of them. This is the same thing we do in what? WACC, because the company will go for equity source of fund and debt source of fund. What should we use as the cost of capital? If the company has gone for only equity, we know for sure that the cost of capital is only equity because we only went for equity. Now, we have gone for equity, we have gone for debt. What is the cost of capital? That we can't say that the cost of capital is debt because you went for debt and equity. It will not be fair for you to select that it is only debt, whilst you went for equity and debt. So if we're to be mathematics, statistics, students will say that let's find the midpoint. Because if one figure is 5, one figure is 5, let's say we have 5 to 10. Let me use an example. 5 to 10, we have, let's say 11 to 15. Which of the figures are you going to use over here? You are to find a midpoint. And it's the same as what? Finding weighted average of capitals, which are 2. You don't know which of them to use. So you find the weighted average, like the midpoint of the cost of capitals of those 2. And the same way in the case of contribution, you do it the same way. So students, I am drawing your attention to the fact that at least I'm not going to continue, but you can just request for this document and move on, right? You can request for this manual and move on. So we have calculation of break-even in sales revenue also available. And look at how beautifully the examiner did it. It's still the same thing that we have talked about, right? So you can request for this manual. But my meeting today is not about going through break-even. Never. That wasn't it. That wasn't what I'm supposed to do. But there has already been a discussion in forum by tutors of examiner for PM, and I represented today. Though I was very busy in the case of still auditing a client and still watching that. It was really funny today how I was able to combine the two at the same time. I never even imagined I could do that. It's really, really serious. You do not have time, but at least it's good to die for the students, right? So the students have to do their part, honestly. They have to do their part because it's too much, right? So we move on to the next issue of the day. I'm just going to stop sharing my screen. Then at least I come back again to deal with the other matters of consideration. A moment, just give me a moment to share my screen, right? That is it. So I think I'm in good shape now. You can see that I'm really doing this thing with passion. I'm not just doing it just like that. So you are supposed to also learn with passion. You have to learn. If you are learning with passion, it will not hit you 4:30 a.m. on your bed and you are still sleeping. We actually started solving a question on Camco. The session will probably end in about 7 minutes time. If it should end, please you resume in. You just have to log in, that is all, right? So I'm just going to read the question, then we solve it again, right? I'm going to read with speed because this has already been digested. So there's no need for me to look at it. If I've solved it, please, what is of importance is to now say that now, probably the first time I solved it, I didn't get understanding. Now I want to understand. I really have to be asking questions. Why this? Why that? Why that? Why that? I know you're not supposed to say that, oh, they are saying 6 times 3, so it's 6 times 3. Why did they say 6 times 3, not 6 times 2? Required first, Henry. Required first. So the first requirement says recalculate. That means there have already been a calculation. Recalculate. So there's already a calculation. Recalculate the estimated lifetime cost per unit for the webcam after taking into account 0.1 to 3 above. After taking into account what? 0.1 to what? 3. So you are not supposed to do the recalculation if you have not read and considered 0.1 to 3. The examiner is telling you straightly what to do. 12 marks, easy peasy. The other areas of part B will be looked at later. It's theory, right? So we come, Camco manufactures webcams, devices which can provide live video and audio streams via personal computers. It has recently been suffering from liquidity problems and hopes that these will be eased by the launch of its new webcam, which has revolutionary audio, sound, and visual quality. The webcam is expected to have a product life cycle of 2 years. Market research has already been carried out to establish a target selling price, target costing, target selling price, and projected lifetime sales volume for the product. Cost estimates have also been prepared based on the current proposed product specification. As all the time, life cycle costing, or strictly target costing, target costing, right? Pardon me, right? target costing start with product specification. Target costing start with product specification based on current proposed product specification, right? So target costing. Camco uses life cycle costing to work out the target cost for its product. Oh, okay. That's okay. So the cost, they use target costing to determine the cost, right? Believing it to be more accurate to use an average cost across the whole lifetime of a product. And that's how life cycle costing look at. Look at the overall cost of the whole life of the product, rather than potentially different costs for different years. You are provided with the following relevant information for the webcam. So we have a product live sales, 50,000 units, target selling price, 200, target profit margin, 35%. So they calculated 35% of the selling price. You can see clearly here, a margin perspective, 35% on the selling price. So if 35%, profit is 35%, then the cost is 65%. You can do that recalculation, you get the same answer. Target cost per unit is 130 over here, right? Estimated lifetime cost per unit. See notes, that 160, they say go and see notes, because that is the estimated cost and it's going to change after we consider that footnote. So let's go and consider that footnote. So we have manufacturing costs. We have manufacturing costs. We have manufacturing cost here to be bought in parts, right? Manufacturing cost. Let me just move to that point. Let me use some arrows to relate it so that at least you can see that clearly. So we have direct material, right? So that is 40. Then we have direct labor. We have direct labor to be 26. We have the next one, which is machine cost. We have it to be 21. We have the next element, that is quality control cost. We have it to be 10. We have the next element, I'm just walking you through, right? Rework cost. So at the moment, the examiner has determined its cost, but these costs are going to change as a result of the footnotes. As a result of the footnote. But do not forget that these are non-manufacturing costs. These are costs which does not come with manufacturing or production. And we are not considering a cost which do not come by what? Production. But on the other hand, if you look at the overall cost of the lifetime of the product, we need to factor those in. So I will just say that I'm going to do a recalculation. I need to just copy, right? Now let's move on, just some few minutes to end the session. When we come back, I'm just taking you through the question. When we come back, we move straight to the solution, right? I will still share this document on the page so that when we are solving the question, please, we are not going to come back to the question over and over again. No, we are not going to do that, right? Good. Estimated lifetime cost per unit per the calculation they've done so far, the estimated lifetime cost per unit is 160, right? Good, let's move on. The average market price for a webcam is currently 150. Wow. So the average price at the moment is 150. They can sell it at 150. The company needs to close the cost gap of 30 between the target cost and the estimated lifetime cost. So over here, the target cost came from what? The market. As we said in target costing, the target cost comes from where? The market. And the expected cost come by in-house. And the in-house cost, they actually use life cycle costing in determining the in-house cost. As we said, target cost gap is the expected cost minus the target cost. Expected cost from in-house, target cost from what? External market. Now they are telling you to do some revision. Direct material, all of the parts currently proposed for the webcam are bespoke parts. However, most of these can actually be replaced with standard parts costing 55% less. Wow. However, 3 of the bespoke parts, which currently account for 20% of the estimated direct material cost, cannot be replaced, although an alternative supplier charging 10% less has been sourced for this part. Please, you can zoom in again if the section ends. Direct labor costs. The webcam uses 45 minutes of direct labor, which costs 34.67 per hour. The use of more standard parts, however, will mean that whilst the first unit would still be expected to take 45 minutes, there will now be an expected rate of learning 90%. So we need to calculate this. This will end after the first 100 units have been completed. That means steady state will set in after 100 units. Railway cost